Would you believe that? Do you hear that drum beat? I know you do. It's all over the news, the internet, and your social feeds. You can't escape it, right? Everyone is talking about the real estate market, but no one says quite the same thing. Is it crashing? Is it balancing out? Or is it a buyer's market? Today we have 4 market experts here to help you navigate opinion and actually get clarity on the market. Are you ready? Let's go. Steve, you got to join me on that. I could not drop you back. So you got to be an eyewitness participant to some excitement.
Yes.
Steve was smiling.
Yeah. Well, in case you don't know, this is Talent Talk. Today we are coming to you. It is September 2nd. August has just ended. We're doing a market update, but we don't even have the final firm numbers for August yet. But we know you're getting questions. So you have with you today 4 market experts in the whole Puget Sound area. I'm Jurgen Robinson. With me to this side is Davina Clarity. Down below is Mollie Canfield. And over to this side, hey, I actually figured it out, is your boy, Steve Chung. Welcome, y'all.
Thank you. Happy day. And good morning, Donna. I see that's Donna and Jurgen there in the cowboy hats, it looks like, huh?
Yeah. I went down to Dallas and got some knowledge and energy and just feeding of the great things that are going on inside of real estate.
Yes, we totally got fed. And we are excited to talk about just the reality of the market, right? Like these are things that we are seeing right now, conversations that we're having with buyers and sellers. And we're going to look at some statistics on what actually is going on. As Jurgen mentioned, you said, hey, we're just over August. So we've got some stats from, the last couple months and like what's going on today. We can have some real live conversation about what we're seeing today in this market. And as that drum is beating, is it the heart beating like with anticipation or what does it look like? What is the beat of our market look like? And it's actually pretty exciting, to be honest.
Yeah, if you peel away all of the hyperbole and the news, it bleeds, it leads type of things, there's a lot of actually good, solid things that we can take away from here without having to be all about hype, right?
Yep. It's not don't believe the hype. Wasn't there a song or a rap song or something like that?
Yeah. You're bringing a little Flavor Flav.
Right.
Oh, gosh.
But we're having a lot of conversations, and a lot of the buyers that we're talking to, even the sellers right now, are like, hey, that I'm talking to, Steve, what's going on with the market? Is it the seller's market? Is it the buyer's market? Is now a good time to buy? Is it a good time to sell? It's just like, what's going on? And as professionals, we've got a lot of data, and we just wanted to go through some of that stuff with you and share with you and show you like what's going on in the market and what we're seeing. Yeah. So one of the things
one of the things too is we also have to be honest about it. The speed at which the market shifted, transition, changed was actually beyond the expectations. It's been faster than it has been at any other time. We shifted gears in about 3 to 5 weeks, which typically in a shifting market would take us 3 to 5 months to do. But, again, you got to kind of peel some things back. And we don't have all the numbers yet for August, but as we're prepping and as we're going into this time, there is a lot, depending on what your situation is. It's not perfect for everybody, but based on what your situation is, there are some things you can take away from this, and we'll keep you updated on what's going on because there are good things to do. Mollie, what do you think?
I think that I've been really I don't know. I've been really lucky to have realistic sellers, and I'm thankful for that because I have just heard a lot of people are really struggling to have those conversations with their struggle. They're having a hard time. The sellers are having a little bit harder time realizing that they can't get the same thing for their house that they could get 6 months ago. Yeah. I know 6 months ago, being able to tell a seller, you know, yeah, I think your house, we can sell it for this. And it would be like, really, Mollie? I can get that for my house. Like I kind of miss those conversations. But I think that, yeah, a lot of people are hearing hype. And so after being able to talk to them about where the market's really at, I think that my sellers are actually they're still comforted, you know, because it is still a seller's market. And they're still going to sell their house. It's just not going to be as high as maybe they were anticipating in the spring, and maybe not over the weekend. So
yeah, but you know what? That is not a bad thing when it comes to the market being a little tamer and reasonable, because it can't be super heated forever, right?
Right. And now it gives my buyers a chance. It's really nice, all the opportunities it has opened up for some of my buyers. I've got some first-time home buyers that were really struggling. They're like, I can't compete in this market. And now there's negotiating power. Just the other day, someone was excited when I showed them a house that's for sale in their price range. And they're offering to pay down the interest rate 2%. And it was like, you know, so possibilities are there again.
Yeah. There's hope.
Yes. Yeah. That's one of the things that I feel like we're in, you know, before, you know, rewind in the last, you know, few months, we were in a marketplace where negotiation for buyers was like, give the sellers what they want more. So, right. If you're willing to do this, it's like, this is what they want. How do we give them what they want and more than what they want, exceed expectations so they'll accept our offer? Like that was the negotiation, was learning and understanding what the sellers want so we could win. And the win, you know, obviously there was a win for the buyer because they got the house, but it was, you know, going above and beyond. And now I really feel like the win-win is so much different, that conversation, because now, even though sellers aren't getting maybe as much, or they're not having the intensity of the multiple offers that they were having, or maybe their time on the market is not as short as it was before, the reality is that pricing, you know, has softened, but pricing was it had really gone off the charts so far. And Jurgen, I know you're gonna bring in some charts and graphs that we can look at. Yeah. But if you look at where we are paced, we are still above in pricing where prices would be if we just had normal price appreciation. So there's still a win for the sellers with the equity position they're at. And now the buyers get to win because there's negotiating power for them where they can get their close, you know, like maybe they need closing costs. And before they couldn't, and it was just heartbreaking that they couldn't even compete. So they were sitting on the sidelines watching the market. Now they can win. Now they don't have, you know, they could be the one offer and they can, you know, negotiate, and they can, you know, you can help that, you know, first time home buyer that was really wanting to get out of that rental. And just the experience that we get to have as real estate professionals is so amazing, that we get to pair up two parties and get to the real, like it's a real win. I just love that we get to do that in this market.
Yeah, you know, Davina, what you're saying is context matters, right? It's not, there used to be a term called like below the fold. Like that's back to the newspapers where the headline would be on top and then the paper would be folded and it would be in the news bin. You'd put a quarter or a dime or a nickel in it and you would get a newspaper. Below the fold is actually where the news story is. And when you look at headlines are like clickbait. They are meant to capture your attention. And even that first paragraph is all about, this. But when you read a little bit past, you actually get the context of what it actually means. Not the thing that's meant to grab your attention, but you find that the story is often very different below the fold or after you get a couple paragraphs in. you start to get the real context of what's happening. So we'll definitely talk about some of that. Jared, if you want to give like a thumbs up, do we have a trivia question all set now? He's going like this, which means we do. Steve, you want to read the trivia question?
Yeah, absolutely. Trivia question. According to the NAR chief economist, what percentage of homes on the market still commands a full list price? Is it 25%, 55%, 40%, or 33%? Drop your answer in the comment section, and at the end of the show, we'll see if you're right.
Nice.
What do you guys
Jared
think?
pulled that one out. I don't know.
So I'm thinking, is that Lawrence Yoon? Is that from Lawrence Yoon?
I believe
Yes, it is. Okay.
He's giving a thumbs up.
All right.
And Jared, do you want to? Yeah, Donna's putting B, and Teresa put B. What were those choices again? Okay, 55%. Good. We're gonna find out if we have a winner today.
25, 55, 40, or 33.
Now, the one thing Jared is good about is oftentimes when you see multiple choice, they build or there's an order in some way. Jared is totally random on his. They will be all over the board.
He mixes it up.
5 to 50 to down to up, and you never know where it's going to be.
All right, so we have a couple of B's. So we'll see what the answer is. So, what percentage of homes are commanding the full list price? And that's from, is that from what, when? Is that now, Jared?
He's shaking his head yes.
Yes, now. Okay.
Okay. Well,
right.
You know what? If we get into the context of things, we look at the mortgage rates, and why don't we just touch on a few spots if you guys are open to it? Mortgage rates. That has been one of the primary things that when that began to shift, we saw a real shift in buyer demand. They were watching. It was something that they were not sure of. And that rise began, you started to really see it around maybe February into March, and then late March really going up pretty quickly. We have a couple more B's and C's. But what do you guys think about where the mortgage rates have gone and what it's doing right now and the impact? And if you want, I can share a slide for context. It's right here. The mortgage rates, you can see this work up, and it really peaked around mid-June to end of June. And now we're just kind of in this little volatile area for rates. They're kind of going up, they're going down a little bit. And we've also seen some mortgage products come on the market we haven't seen in a long time too. How are you guys feeling?
Yeah, I think, you know, and we ask that, the question gets asked all the time, you know, should I purchase now? You know, are interest rates going to come down? And, you know, what do you do? And we always say, you know, well, it depends, right? It depends on there. It depends. You know, we always say we don't have a crystal ball. We only know what we know, like right now. We know what the past holds. We know what we know right now, and we don't know what's going to happen in the future. You know, if we look at historically, you know, and of course, you know, where mortgage rates or interest rates have been, and we've talked about this before, you know, 6 months, like when the last couple of years, we actually had the interest rates were falsely low, right? They were they were low, but that wasn't normal. And so that was an anomaly. And where we are actually right now with interest rates is really kind of trending on kind of a norm that would have been realistic had the interest rates been a little bit more level, you know, throughout. So you know, it depends on price, and it depends on your longevity. You know, so if the home price is affordable and the payment's affordable, then you might want to, you know, crunch the numbers and see if it makes sense. So, and those are the conversations that we have to have. And then, of course, with the buy downs, and then, of course, interest rates, you know, these are some of the things that we're hearing is that interest rates might go down. They might. We don't know for sure. So lenders are saying, hey, you know, lock that rate in, make sure that house is affordable, marry the house, not the rate.
Yeah.
right?
Or
Or
date the
date,
rate, marry the
date the
house.
rate, not the house, or marry the house. Yeah,
Date the
you
rate,
got
marry
it.
the house.
Marry the house, date the rate.
Great.
And did I say that right again?
You did. You said
got
it right.
And the thing is if interest rates go down, whoop, you could refinance, right?
Mhm. Right.
If they don't, you've got appreciation, you've got the longevity, you've got the
Mhm.
all of the perks of
Well,
home ownership.
Davina, you mentioned something, and perspective is huge. So over here, there's this is the rate today, or just came out for Freddie Mac primary mortgage,
Mhm.
5.66. And perspective, it means so much. And a lot of home buyers have a very short perspective. 2.87% was last year. Oh my
Mhm.
gosh. It must be that the rates are out of control. Steve, you have a little more perspective when it comes to rates. What does 5.66 mean to you?
5.6 is still low. It's below the all-time average of where the historic average of where interest rates typically are. I believe the historical average is right around 7.5. So the 5.6 where we're at is still low. I remember the time when I bought my first home, we were at 9, and I was ecstatic. So at the 5.6, I mean, it's still a great rate. It's still a great rate. If
You're
we
not
were,
telling me people bought homes at 9%, Steve.
I know, but like Davina mentioned, we were here in the last couple of years. We've been hovering right around 3. Um, but that was just because of what was going on with the pandemic. It was a false interest rate. Howard Chung mentioned it from John L. Scott. I mean, rates were on sale for the last
Mhm.
years, and now they're not on sale, but they're still a great rate. It's still a good
Mhm.
buy. The cost of money is still priced very well.
Yeah. And we're
Um,
seeing buyers start to come back into the market. Everything's settled
Mhm.
and
yeah,
people get accustomed to it.
yeah. I
And
mean,
then, oh, go ahead.
I was saying the shift. I mean, like you mentioned, Jurgen, it happened, and it happened quick, and I've never seen it happen this quick. But I think it just took a bit of time for the buyers to really adjust, and now
Mhm.
sellers are adjusting. The market, even if we're taking a look at the numbers, which Jurgen has, still shows that sales are still at par in some areas, uh, and maybe
Every
even
market is different, right?
yeah.
Yeah.
So
And, Mollie, this is, get your feedback on this. Okay. So we know that the market itself, I take it outside of real estate. There's talk of recession, and regardless of how people feel about recession, it's still it causes the heart to just pause a moment, right? To talk about. But when it comes to housing, what does recession talk mean for housing? So we can look at that and we can see that, what,
Mhm.
for the most part, other than what happened when there were so many other conflating things that came to bear with the 2008 and the last crash, recessions as they go along have actually not been bad news for real estate, but it just kept chugging along. So there's been, other than 1991, where there was essentially a flat market, every other we've seen increases in home prices. And then also with mortgage rates, we've seen, because they want to help alleviate the impact of the of a recession or that market slowdown, interest rates typically are going to fall, and that fall typically holds until after the recession is actually over. So it actually has a lingering effect on that. When you hear that and you're in conversations with buyers and sellers, what does this mean to you in the conversation?
What does this mean to me? I mean, I just kind of explained it the way you just did. Just
Perfect.
that, I mean, houses are typically just going to kind of level. You don't usually see like, houses just like tank. And a lot of people get scared of what happened in 2009 and 2008. And
Hmm.
so, there's that fear. But I mean, typically they level, and we're seeing that right now with things leveling, and it's really exciting actually in just in August, what I noticed is that a lot more houses were getting priced right. And in July, it was really hard. I think the conversations with sellers were more of a struggle in July. They still weren't caught up with where the market had shifted to, and so there were a lot of huge, price decreases. But houses weren't just plummeting in value. It's just that they were so used to being able to increase the price, and we're just not there yet now. So houses are.
That's
that is
perfect.
that's a great point, because to have a market crash in some way, you need a few factors to line up. Now, mortgage rates, they cooled buyer demand. When they began to rise, buyer demand cooled. But to have prices actually drop, we need to see other things happen in the market. We really need a influx of inventory into the market, or we need an imbalance to occur. There are three ways that homes typically come onto the market. It's either resale, new construction, or distressed homes, which would be foreclosures, or it would be short sales that would come onto the market. And Davina, you've seen some of these things, like for homes on the market. This is just months of inventory. This was during the crash over here. We were so imbalanced with the amount of homes that were on the market. 10 months, where a balanced market is between 4 to 6 months of inventory. Even as things go right now, at 3 months of inventory, we're still lower than we have been in previous years when it was a good, healthy market. And then with the new construction, we see that under construction has been rising because the starts and the permits had already been pulled. The completions are pretty steady. But what has happened is, as those rates began to rise and builders recognized what was going on, they slowed their permits. You can see all the permits dropping. You can see the housing starts dropping because they're not inclined to flood the market, because they're in it to help and also to be profitable. And then for lending, getting a loan was so, they said at one point, you had to fight to not be approved during the housing bubble before. Look at lending standards. They've continued to stay really low for the credit availability. So it's stayed tightened, which means that foreclosure activity, which was during that peak, has dropped significantly. We kind of almost removed 20 and 21 from the equation because of the lack of foreclosures. So just taking the first half, we can see the foreclosure rate has been really low historically. So when we take into account the existing homes on the market that are coming on or not coming on, the new home sales slowing to keep pace, and that there aren't a flood of foreclosures coming on the market, inventory is staying balanced. Davina, are people recognizing that when you're talking to them, or is there a lot of fear still?
I think education is definitely knowledge in that, because even before, people were, homeowners or buyers were, when you mentioned the foreclosures, I want to say, I'm trying to remember the statistic, but it's like not even 0.5% of homes are even in foreclosure status. And what's crazy about that is that, if we go back to the bubble, the percentage, I think it was like 10 times, 100 times that amount, right? And back then, people were underwater. You talk about short sales. So they were underwater. They owed more than what their mortgage balance was. So they couldn't even sell their home. In this market, there's only 0.4%. And I want to say it was somewhere around 80%, or it was a huge amount of those homes all had equity. So it's like you wouldn't even make it to foreclosure, because you could sell it and probably still make money, or cure the loan or the liens on the property. So it's like, hello, you look at statistics, and if you don't have all the facts, it can create fear. So we're in a way different space than we were, and good space. I think we're in healthy space, and we're approaching really healthier space. And as we are talking, there's so much more to talk about, but we're like running out of time. So I think we're like just about out of time now. So I know that if you wanted to touch on any final graphs, we do have a trivia question,
Absolutely.
which we can
Okay.
get that up
Let
on the
me
screen.
show two real quick because
Okay.
they address what we're looking at. And
Mhm.
Davina, when you're mentioning that about foreclosure, it doesn't mean that they don't exist and that there aren't people who really have had trouble, issues, etc. And our hearts will always go out to them. But as the general condition overall, it's much healthier than a lot of people recognize or realize right now.
Mhm.
And then for here for the home price forecast, so our forecast, there are 7 different ones for 2022. Hey, 2022 shift in the rates. Everything is does that mean the home prices are dropping? Well, no, all the forecasts, and this is current over 7, still put an average of 10.3%. Nationally, last year was like 15%. So there's a cooling, there's a slowdown. And you hear about like price drops, but that's not necessarily what's happening. It's not like the sold prices in most markets are going down, but the price that the sellers are trying to get initially is overshooting the market in many cases. So we're seeing price drops there. But we're not necessarily seeing across the board that impact the sale price. Doesn't mean it can't happen or won't happen, but it's not where it's at right now. And then the 3 reasons to buy a home right now for buyers. Molly, you were mentioning buyers and being able to do something now where they've been almost like locked out of the market.
Mm-hmm.
This is good information for them to be. This is like that ray of hope that they can see.
Mm-hmm.
3 reasons that is good today for buyers. First, over here, the multiple offer scenarios from April, May, June, you see that they've lowered, and that's a trend that is
Mm-hmm.
anticipated to continue with the July numbers and with the August numbers, which means there is a better chance of actually getting that home. Fewer homes selling above asking price. It's gone from 61% down to 55%. June, 51%. And again, that's a trending line in a balanced market. Not more than half of the homes are selling over list price because we're doing a better job. Sellers are doing a better job hitting the mark and buyers. So there's better negotiation. And then the supply of homes since April, we can see that they've just been growing 2.2, 2.6 to 3 in June. And that number, again, is getting healthier and more towards a balanced market. It's hard to call it a buyer's market, but it is
Mm-hmm.
easy to say a much more balanced market, right?
Yeah.
Yep, that's right. All right, so let's bring up. I think if you were reading that chart, you might even have gotten a little bit of a clue on the trivia question. But so,
So,
all right,
trivia question. According to the NAR chief economist, what percentage of homes on the market still commands the full list price? We've had several answers in the comment section: 25%, 55%, 40%, or 33%.
All right. Donna's got
Don
55%.
has B, Teresa's B. You know what? I feel like I'm on the B train, Cindy's on the C train. And if you guess the answer, did you guys have an answer?
oh,
Nick chimed in. She's a B. Jurgen, Donna, Molly.
Oh, careful what you call people, Steve.
Jer-
oh,
No,
sure again.
No, I would be on the B train as well.
Davina, Molly. Any quick guesses?
You know, I think I'm B. I'm like BC. You know,
I thought it was 49, so we'll go with B.
Ooh.
I think we
I'm
got a
like
lot.
I feel like yeah.
What's the answer?
I think it's B.
Say-
Oh, see, I was right. I was there, and then I
Yay!
was like, no, I'll go
You
for
shoot,
Ugh,
Cindy
man.
Decker pulling it out there. I thought it was actually a lot more. Okay.
Ah,
Nice
man.
job, Cindy.
Cindy with a C. All right.
I know.
Yep.
She just took the first letter of her name and said, that's my guess.
That's you always go. The number of available for sale homes is still near record lows. This is from Lawrence Yoon, the chief economist, and the prices continue to rise nationally with nearly 40% of homes on the market still commanding the full list price. So, yes.
Davina, can I do one thing real quick? Just,
No.
you
I'm
can
sorry.
get, I know, I say, can I? And then I just roll into it. Hey, anyone who is interested and wants to get a market update that is right away, immediate on the first of every month, it again maybe not be all the finalized numbers, but it gets you a lead into what's going on. We create market insights, and we can do it for every market. We can do it for every city, every county, or if you wanted, we can even create it all the way down to a neighborhood, which is really unique. Just have so much flexibility with being able to do this. And this is what one of those can look like for you. So this is the Olympia market. You'll get an idea, and it's truly colorful, easy to read, of what the new listed home pending sold. So you get a nice visual. You can also see all the activity highlights from active pending sold. So you know what's going on in the market, and you know it before anybody else, because almost every other report won't come out until 5 to 10 days after a month is ended. This gets you the best information immediately, and then we can help you out there, or you can just use it for your own knowledge. They've got 6-month comparisons, so you can see how it may be changing or trending. And then you've got the months of inventory down here. So super easy. You can see what's going on quicker than anybody else is going to get it to you. And you can use that knowledge to negotiate or really get it down to just a finer detail than you can get almost anywhere else.
So we can get that just for our neighborhood, Jurgen?
Absolutely, Steve. If you'd like, I'll get it for your home.
Wow.
It'll be a neighborhood one.
Dial it down. Right?
And you know what? When you see that home go up on the market, you will be surprised. What?
How do I get that report?
Just put it into the comments or private message us. We'd be happy to set that up for you.
Absolutely. And no matter what platform, so we didn't give a shout out to our viewers, our listeners. So whether you're on Facebook, YouTube, LinkedIn, any of our podcasts, Spotify, we are so happy that you joined us today, and definitely like us, follow us. If you have any questions, if you're looking to get into real estate and you just want to find out what are my first steps, how do you want to talk to us about that? We are happy to share information with you, whether it's a market analysis, whether you want information about your home in specific, wanting to find out who to talk to for a lender. We have all of the resources, listings and open houses. Go to our page and check out our listings and our open houses. They're upcoming. We just love being here as a resource for you. Don't we, you guys?
Yes.
And Davina, it's easy to get kind of that national perspective, but the biggest value is getting the information that matters to you, which is local. It's local, or we can even call it that hyper local. I mean, down to the neighborhood. So, oh,
thank you, Nick.
Thank you, Nick.
Woo-woo.
Cindy was a winner.
All right. Yeah. All right. That was her winning woot woot, right? All right. So it is time for us to wrap up until next time, and we go out with a big be bold. You want to count us down and make sure we have more to come. So stay tuned on your channel and look us up. And we love you. And count us down, will you, Mollie?
Sure. 3, 2, 1. Be bold.